Well, good morning, Jagender Rana here. The topic of the day is streamlining policyholder protection norms. Streamlining policyholder protection norms. The Insurance Regulatory and Development Authority of India has streamlined norms on the protection of policyholders' interest by repealing 30 different circulars and issuing a master circular. So the master circular on protection of policyholders' interest under the IRDAI Protection of Policyholder Interest Operations and Allied Matters of Insurers Regulations combines policyholders' entitlements into a comprehensive reference document. It emphasizes measures towards providing a seamless, faster, and hassle-free claim settlement. Seamless, faster, and hassle-free claim settlement experience for policyholders. So, while improving service standards to foster a climate of trust and transparency within the insurance sector. So, according to circular, both the life and general insurance companies are mandated to provide an essential summary of important information at various stages of an insurance contract. So, this includes guidance for prospects, policyholders, and customers prior to sale, at the proposal stage, upon receiving policy documents, during the policy terms, and at the time of claim for all insurance segments. The insurers have to provide a customer's information sheet for all insurance segments, outlining key policy features, benefits, and exclusions. For the proposal form and CIS must be made available in regional languages upon the customer's request. So, a 30 days free look period applies to both life and health insurance policies, allowing policyholders to review the policy terms and conditions. No premium proposal deposit is required to be paid to the life or health insurer along with the proposal form, except in the case of policies where risk cover commences immediately on receipt of the premium. Insurers must provide a search tool on their website to enable the verification of authorized distribution channels that can sell their insurance products. An assessment of suitability for life insurance is required for saving related life insurance products and annuity products, excluding annuities purchased from the proceeds of the NPS and employer offered superannuation funds. So at the proposal form stage, the insurer should collect nominee details including bank account details to facilitate prompt settlement of claims in the event of the policyholder's death. Insurers are directed to enable their IT system to interact with DigiLocker, allowing policyholders to use this service effectively. And turnaround times are specified for policy processing and claim settlements. According to the circular, policyholders can now search for unclaimed amounts on the Bima Bharosa website of IRDAI. So by implementing these measures, IRDAI continues to prioritize the interest of policyholders, enhance transparency and efficiency of the insurance sector. The master circular has been issued in response to recent concerns raised by the IRDAI regarding the rising complaints of mis-selling of policies in the industry. So, as per the data from IRDAI's FY23 annual report, the total number of grievances registered with life insurers was 1,24,293, with 20% related to unfair business practices. In the case of non-life insurers, the number of grievances was 78,347, with 66% related to claims. So these grievances in the life insurance sector are about the product. Insurance companies must reduce the number of policyholders complained and also ensure that the premium paying public gets the facilities they expect at the time of buying the policy. So referring to the three parts of insurance: pricing based on the actuarial calculation, the development and design of the product, and finally selling the product. Having sold the product, what are the kind of grievances that come to the regulator? Very frankly, the grievances that are raised against life and non-life companies are totally different. So the issue starts from the bottom, in the sense that from the end of the product, that is from the grievances. So why are there so many grievances? Grievances in the life insurance sector are not about the claim settlement or the time taken for the settlement, but about the product itself. So in case of death, the claim amount comes. That is not a grouse. The grouse is about the mis-selling of a product. It is an alarming level. It has got the attention of the policymakers. The policymakers are very concerned and they want this to be addressed. It is not about the mis-selling of a product. It is particularly about the payment of claims, the claims being rejected. The amount of claims that are being paid is substantially less than what was expected. And of course, at the point in time, the exclusions in the contract, though legally binding, are sentimentally very much opposed. So you have a grievance redressal mechanism within the company. Above that, you have the ombudsman to settle the issues. Despite that, even in non-life also, majority of the grievances come from health, very few maybe from other areas. So the insurance industry cannot move on the next level of penetration of growth without addressing the poor customer experience. The life industry needs to focus on protection products to measure insurance penetration. Instead of looking at premiums paid by GDP, we should be looking at the sum assured benefit customers get by GDP and the sum assured by population. When it comes to health insurance, policyholders need certainty in settlement of claims. The industry can look at an awareness campaign to make policyholders aware of medical conditions and exclusions. So, the Insurance Regulatory and Development Authority of India serves as the apex statutory body entrusted with the oversight and development of the Indian insurance sector. It plays a pivotal role in ensuring the orderly growth of the industry, safeguarding policyholders' interest and promoting fair market practices. It was established under the IRD Act 1999. So, a significant development aimed at bolstering the Indian insurance landscape, IRDI announced a comprehensive regulatory revamp on March 22, 2024, signifying a commitment to fostering a more dynamic and inclusive insurance ecosystem. Because IRDI's vision for the Indian insurance sector is encapsulated by the ambitious goal of insurance for all by 2047. So this underscores a commitment to ensuring that every citizen has access to appropriate insurance coverage encompassing life, health and property protection needs. Now, IRDAI seeks to foster an environment that encourages innovation within the insurance industry. This will allow insurers to develop a wider range of products that cater to the evolving needs of the diverse customer segment. Additionally, the reforms aims to stimulate healthy competition within the market, ultimately leading to more competitive premiums and a broader range of insurance options for policyholders. So underpinning all these objectives of IRDAI's unwavering commitment to protecting the interest of policyholders, the revamped regulations aim to strengthen policyholders, safeguards and enhance transparency within the insurance sector. So there are key regulatory changes. The comprehensive revamp initiative encompasses 8 new consolidated regulations, each addressing specific aspects of the insurance industry. And they are: first, IRDAI Rural Social and Motor Third Party Obligations Regulations 2024. This regulation consolidates existing guidelines regarding minimum insurance coverage obligations in rural areas, the social sector and motor third party liability insurance. It streamlines compliance procedures and expands the scope of social sector coverage. Then IRDAI Bima Sugam Insurance Electronic Marketplace Regulation 2024. This groundbreaking regulation establishes Bima Sugam, a digital public infrastructure platform aimed at democratizing access to insurance. Bima Sugam will function as a one-stop shop for all insurance stakeholders, facilitating transparency and collaboration across the insurance value chain. Then IRDA Registration, Capital Structure, Transfer of Shares and Amalgamation of Insurers Regulation 2024. This regulation streamlines procedures for insurers, registration, capital structure management, shareholding transfers, and mergers, amalgamations. By simplifying these processes, it aims to enhance the ease of doing business within the industry. And next, IRDAI Corporate Governance for Insurers Regulations 2024. This regulation for the first time formalizes corporate governance principles of the insurers through regulations. It outlines the roles and responsibilities of the board and management, emphasizing sound and prudent governance practices. This fosters greater transparency, accountability and trust within the insurance sector, ultimately benefiting policyholders. Then IRDAI Insurance Products Regulations 2024. This regulation merges 6 regulations into a unified framework governing insurance products. It empowers insurers to respond swiftly to market demands by streamlining product development and approval processes. Additionally, the regulation emphasizes good governance in product design and pricing, so ensuring transparency and protecting policyholders' interest. It also encourages the development of innovative insurance products that cater to diverse customer needs, promoting a more inclusive insurance market. Then IRDAI Registration and Operation of Foreign Reinsurers and Branches and Lloyd's India Regulations 2024. This regulation consolidates 2 regulations governing the operations of foreign reinsurer and Lloyd's India. It aims to foster the orderly growth and development of the Indian reinsurance sector by streamlining operational procedures and promoting transparency. So this in turn benefits both domestic insurers who can access a wider range of reinsurance options and policyholders through enhanced risk mitigation for insurers. The next one is IRDAI Actuarial Finance and Investment Functions of Insurers, Regulations 2024. This regulation consolidates 9 regulations into a single framework governing the actuarial, financial and investment functions within insurance companies. It emphasizes sound management practices and robust risk assessment procedures, ensuring the financial stability of insurers and ultimately protecting policyholders. So additionally, it streamlines regulatory reporting requirements, promoting transparency and facilitating efficient regulatory oversight. Then IRDAI Protection and Policyholders' Interest and Allied Matters of Insurers, Regulation 2024. This regulation consolidates 8 regulations into a unified framework dedicated to safeguarding policyholders' interests throughout their insurance journey. It focuses on ensuring fair treatment during policy solicitation and sales, as well as ongoing protection while interacting with insurers and distribution channels. So the recent regulatory changes introduced by IRDAI have the potential to significantly reshape India's insurance sector, benefiting various stakeholders. For policyholders, the revamp promises better protection by focusing on their interests, standardizing practices, and improving grievance redressal mechanism. This ensures fair treatment throughout their insurance experience. Additionally, streamlined product development processes will offer a wider array of insurance products, meeting diverse needs and enhancing accessibility. The clear disclosures and simplified regulatory reporting further boost transparency, empowering policyholders to make informed decisions and trust the insurance sector. Insurers stand to gain from improved efficiency through streamlined regulations that reduce complexity and administrative burdens. So this allows for potential cost savings which can be passed on to policyholders. Moreover, simplified processes for registration, capital management, and mergers, amalgamations creates a favorable business environment, encouraging innovations and industry growth. So the focus on enhancing foreign reinsurance operations expands insurance options, potentially strengthening risk management strategies. The regulatory changes also aim to drive overall industry growth by increasing insurance penetration in underserved markets, particularly through initiatives like the Bima Sugam platform and a focus on rural and social sector obligations. So this fosters a more inclusive insurance ecosystem. Furthermore, promoting healthy competition can stimulate industry growth by offering competitive premiums and a broader range of insurance options for policyholders. For the principles-based regulatory approach enhances clarity and consistency, attracting investments for long-term growth. However, while the reforms offer significant benefits, navigating transition may present challenges for some stakeholders. Insurers may need to adjust to new compliance requirements and processes. Additionally, effective utilization of the Bima Sugam platform will require capacity building and efforts to enhance digital literacy among stakeholders. IRDAI's recent regulatory overhaul makes a pivotal moment for India's insurance industry, aiming for inclusive growth and enhanced consumer protection by streamlining process and fostering innovations. The reforms offers policyholders improved protections, wider product choices, and greater transparency. The insurers stand to benefit from increased efficiency, expand reinsurance options, and a more conducive business environment. These changes are expected to drive industry expansion, particularly in underserved markets, and promote a healthy competition. While challenges in adaptation exists, the long-term outlook for India's insurance landscape appears promising, with a stronger focus on consumer needs and market dynamism. Thank you very much.